Hey guys, how's it going? Welcome to the London session recap for Eurodollar on Thursday, the 24th of March 2022. So, obviously, coming off monthly, weekly, daily extreme demand. You guys are probably sick of hearing me saying it, but we have to always bear that in the back of our minds in case we're going to have that bigger, deeper daily/weekly higher time frame pullback, right? That said, let's keep things nice and simple. If we're playing between this 4-hour swing range, we've come up to the extreme, we've failed to break up above. Okay, so there's every possibility now that we could be ready to go on and break this week 4-hour and daily low, right? Because it's a weak low because it hasn't broken any swing structure. The flip side to that, or at least the argument for more of a bullish case, would be that because we're coming off such major demand, right, we're expecting that bigger higher time frame pullback, and also if we kind of look at these sort of larger internal swings in price, there is the potential that we could kind of have another similar move to here, right, and then we start to break out to the upside, and we can target this high, potentially come to this supply, etc., etc. So it's all getting a little bit messy on the 4-hour chart. We did have this sort of series of demand chain forming, right, yesterday or the other day, start of the week, we had a little very subtle bullish chock, right, where we had a little bit of a pullback, a break of that low, which means this is a high here. We then took that high, giving us that bullish chock, okay, where potentially we were then going to hold this demand, this wick demand that caused the chock. We had a bit of a reaction yesterday, but then coming into London, price was looking like this. So although the demand chain hasn't technically failed really until price kind of starts to break through here, this looked like that reaction wasn't really going to do much, right? And it seems pretty likely that we're probably going to take out these equal lows and take out this demand chain. And then potentially, because all of this demand has been absorbed, all the orders have been filled, we could see a rapid movement away. Of course, it doesn't have to happen. We could literally sweep these lows, mitigate some orders within here and continue up and do whatever. We're just running with probabilities, right? And that would be my main forecast. But like I was saying, right, until that breaks, this demand is still valid and we could still kind of see a bit of a choppy range. It's all getting very messy and very tight, where we're seeing supply start to kind of form, demand starting to hold, and we're just trying to play within the middle of here. So it's not the highest probability of conditions whatsoever, but if I had to pick one, the path of least resistance is to the downside, right? Swing trends, M15, 4-hour, daily, etc. are all bearish. We're starting to see supply still hold here. We've had a reaction to demand. It's been very weak. So coming into London, if anything, I'm probably favoring that low to go. Does that mean I necessarily want to short? No, because if we look at the M15, which is obviously kind of my main time frame for giving me my intraday bias, although we are playing within this bearish swing range here, coming into London, price is around here. So we're heavily in the discount, this being the EQ, right? We're pretty much in extreme discount, the bottom 25%. If I zoom in of where price was as well, is we were coming into this demand here. So this is a demand zone that flipped supply. So we had this supply here, right, because it broke this low. So supply comes into the market to continue that movement. Price then pulls back into the supply zone. It reacts. Remember, the reaction is key because it kind of essentially validates that there is, a decent amount of supply within here. But that reaction fails to put in a lower low, right? And then demand steps in to then flip that supply zone to demand, okay? So that pullback, that reaction, this reaction here, is where the demand stepped into the market to overpower supply. So then during Asia, on Thursday, price comes into that demand. Obviously, it starts to react. Clearly, fails to put in a high. Clearly, fails to break the high. So then, once we get a candle closure below the reaction around here, it's a very poorly drawn line, but I believe it's there. Yeah, there. Then at that point, the reaction to this demand, this supply to demand flip, has now failed. Okay. So this is where it gets a little bit tricky, and kind of what I was trying to explain on my markup is that then when we're coming into London, I'd refine this demand to this wick, right? Because there's every potential that it's quite a large zone, right? Price could come in here, form a bullish chock, which is then what we got, right? That being the last internal high. All of these candles break the prior candles low, so then we get a bullish chock. We then look at the demand that caused the chock, and there's every potential, right? We could get a nice long within here to then push it up to supply. But because this is kind of the true pivot demand, and this is where the initial reaction was, right? And then if we draw on use a chock line, but essentially drawing from the base of the reaction. So then when we get the candle closure, we now had a failed reaction. So technically, anywhere from the low of the reaction to the peak of the reaction, this box here is supply, right? That is the supply that flipped this demand level, right? Reaction, flip, okay? So although at that point, as price is coming into the supply, this zone here, this demand, I know it's getting a bit messy, but this zone is still valid because price has not broken through the bottom of it. So this is, because I get this question a lot, right? When does a zone become invalid? A zone is only invalidated once price trades through it. So at this point here, because at that point, there has not been enough demand within here to contain price. So only once price trades through it is it confirmed it's done, it's over, it's validated. But the flip is what we use for a bit of an earlier signal that it might be about to fail, because price comes in, it reacts, and then once we get the candle closure below the reaction, right, that's the first very good signal that potentially this zone isn't going to hold anymore. Okay, but it's just probability based, right? It's not a guarantee, of course. So with all that said, hopefully you guys can kind of understand the way I was interpreting this then coming into London, is I'd refine it to the wick. I thought, there's some potential, but there could be a decent amount of orders within here to then push up and break out. So what would have been ideal to then look for those counter trend longs is not just the chock, but to see price clear this box here, right? To clear that supply, because remember, this supply is what flipped this demand. Okay, so if that had happened, right, clearly breaking out that supply and giving us a bullish chock and then coming back down, I think there would have been higher odds of this long then playing out for a bit of a quick counter trend move, or potentially even pushing up to here. Okay, so that was all in the back of my mind. Obviously, it's quite hard to kind of convey and get all of that across to you guys in quick pre-session analysis. And that's kind of why the real simple trade, if you want to trade counter trend, is to just wait for price to come into this extreme, right? We have a bit more of a demand chain coming off these nice strong extreme levels, right? Cause a lot of momentum, some nice inducement below, right? This pivot zone had already been mitigated, you had the flip, etc., etc. It's all a bit of a crappy mess, right? So if you are going to trade counter trend longs, this is kind of where you want to wait for. And really, that's what I had planned in the back of my mind to do for this session, is sit in my hands, not really that bothered to look to trade this session, compared to the clean stuff we've had the other days, right? Sorry, that was during Asia, I meant this one up here. This big large supply chain up in the premium, pro trend within a 4-hour supply zone, etc., etc. Right? This is the stuff we want to be waiting for, not trying to kind of force counter trend stuff in here. And I would also argue, also not trying to force pro trend stuff within here, right? Because it's heavily in the M15 discount, like I was saying, right? This is the range. It's not well priced down here, and you're also trading, you're trying to short into demand, right? Which is never going to be easy or worth it, or ideal, in my humble opinion. So when we then did get a bit of momentum coming in, kind of Frankfurt volume kicking in, we got the bullish chock, etc. And then as price was coming into here, I ended up taking a long, which, as you guys have seen, was for a loss. It is what it is. I've seen these trades play out plenty of times, but it's just a bit of a mess setup. Meh was the sound I was trying to make there. Why risk my capital in this? Yeah, it could play out, but I kind of want to be, at least my personal style, I kind of want to find that balance between being reasonably conservative and sticking to the high probability stuff. But I am still partial to kind of taking those slightly more aggressive, quick in and out counter trend trades. But for those reasons I was explaining, kind of with this being the flip of this level here, it not being that super clear, I'd rather take those longs from down here. Obviously, it's easy to say with hindsight because I took a loss. If it had played out, it would have been like, yeah, here's a nice counter trend long. But that's just trading, right? That's just part of the game. We get a little bit too attached to recency bias, so we do, we get those losers. It's easy to kind of really dig into them. But that would be the main reasons why. So hopefully that makes sense. So yeah, let's take a look at that M1 entry level now. So that's when we essentially got that initial chock, but we hadn't quite cleared that supply flip. So price initially came in and touched the distal of it. So yes, there was technically an M1 entry within here because we had the M1 chock, right? So you could have either entered on the extreme, or we have this flip here because that doji reacts and pushes down. But it's not very clear, right? This doji doesn't sweep anything. There is inducement here, but it's all part of one up move. Typically for a flip reaction, I like to see at least a bit of that internal pullback, and then it's a bit clearer. So if you are going to take that, I'd only take that on the extreme. But for me, because I already didn't like it for the reasons I was explaining, at this point I was like, yeah, I don't care about this. I'm gonna leave it go. And I was kind of quote unquote being disciplined and waiting for price to come down to here. But then when we had that movement come up and then we came back down, and then I saw kind of that momentum, because momentum is what always kind of makes me sit forward in my chair and kind of look to get involved, because it gives me a lot more confidence, because that's where we're seeing that overwhelming imbalance between supply and demand. To me, that shows me big money stepping in the market. So when I saw that from here, because originally I had this drawn on, this little demand chain from the pivot, it obviously didn't quite hit it. But when we start to move away, I look left, doesn't make sense. Okay, yeah, it's the M1 range, right? Which essentially would be like an M2 candle. I'm then happy to refine it to that, see the movement away. We've got the bullish chock, have some nice inducement here, enter on there. And what I also liked about this was that entering on the distal of that M1 demand, right, with a 2 pip stop was quite large. So I knew potentially, this is where I was kind of viewing it, if price did want to come a little bit lower and sweep me and potentially mitigate the distal of this, I might be able to stay in. So then when this started to happen, right, it came in, spiked through and it started to go up here, I was feeling a little bit smug. I was like, yep, sweet, I'm going to stay in this trade now. And then as we can see, right, it failed to break the high and it went out. So it is what it is. But hopefully you guys can see the logic behind that trade. I saw it as the M15 demands that caused the bullish M15 shock. Came in and mitigated the M1 range demand. We had a decent kind of larger liquidation here. Reasonably V-shaped move away, right? It's quite big momentum, M1 shock. This wasn't a flip because this high didn't react to anything, right? Price pushed straight up through supply. So enter on the extreme. Nice inducement as well. I like this as inducement because that low did what? It caused a high, okay? So that's decent inducement. But yeah, it just didn't work out in this case. And my main reasoning for that would be that we didn't clear the supply, right? This supply here, just going to zoom in a bit more, wrong chart. We didn't clear, like I was saying at the start, right, this kind of supply here that had flipped this demand. So that's why it wasn't really that ideal. But then it gets stopped out, right? So we kind of have this big, larger sweep. We then do actually clear, we fully clear this demand zone here now, right? Price is through it, it's completely gone. So at this point, right, only really waiting for this pivot demand to then be hit if looking for those counter trend longs. However, we see a lot of volatility, then there was a lead up into news as well, and we get another bullish chock here on the M15, right? Because we initially chocked here, then when we came down, we had a bearish chock here, right? And then we had a bullish chock again as we take that high, right? Because all of those candles break the prior candles low, so that's the high, it's the nearest high once we had that bearish chock, so then we had the bullish chock. But at that point, when we have this nice kind of big strong move on the M1, and then we start coming down, right? How does the M15 look? Well, I'll show you. You can use the joys and wonder of bar replay. Get on the right time frame. There we go. So at this point, as the M1's coming back down to around this level, this is what the M15 looks like. So for me, yes, there's been an M15 chock, but this low here has not mitigated any pivot demand. Which is okay. You can still look for longs from within here, but what I'd want to see is M15 demand. But at this point, because we had the bullish chock, but then price came down and closed back down here, there is no valid demand. Because remember, you need to have a candle close above the wick. So at this point, there's no M15 demand. So for me, that's not really a trade I'd want to take at all. So I'm not even really looking at this point, just letting it play out. We then do come in, essentially mitigate this flip, right? But this flip, no inducement, no sweep, etc., etc. And this was bang on high impact news. I believe it was German PMIs or something like that. And then we got another big strong momentum for it. Okay. Now at that point, if we play the M15 one candle forward, all right, now you have the big candle closure up above. So now you have your M15 demand, right? So you can draw it like this, technically not super valid because you want it to be on the next candle that gets engulfed. You could cycle through the time frames or you can refine it to the wick. It depends on how strict you kind of want to be, right? But the fact of the matter is, right, we have clearer demand that has now stepped in and caused price to be able to close above that high. So it's looking a bit more solid for longs, but I wasn't even really looking at the market at this point, dealing with some stuff in the Discord. And then yeah, so then when prices are coming back down, again, you don't want to be really looking for these lows. They can play out. I'm not a big fan of them, as you guys know, because one, there's no inducement in the leg. All of these candles break the prior candles high, so it's one big up move. It's from news, and typically when you see that, especially as this didn't sweep any liquidity, there's nothing there, right? These are very often fake lows, especially when we have the unmitigated extreme nested within that M15 wick, liquidated these lows here. This is a lot higher probability, okay, if you are going to take that risk entry. So 2 pip stop loss would not have been tagged in unless you wouldn't have been tagged in if you cover the low. It is what it is. And then there's no M1 shock, only entry in a seconds really if you trade that. And then at that point, right, as it tries to make its move up and get up there, this is where you just stay away from no man's land, right? We've taken the low, taken the high. It's just a mess, right? Potentially if price came all the way back down to here, then maybe, right? Because then you've got a bit of a demand chain forming. Yes, this low didn't break any structure. Well, actually, no, it did, because there's the M1 shock there, right? Now there's a bit more behind this extreme, but trying to kind of trade in within here, you're just asking for trouble most of the time, especially as we're coming towards the end of the session. 10 a.m. GMT is here at this point. So this is the London Knoll, I'd stay away from it. But let's say this was kind of like, 8 a.m. something GMT. Yeah, this would make a bit more sense. It's part of the demand chain. It did eventually lead to the chock. So if price kind of came down into here and then gave you another entry, that's the type of thing maybe you'd want to consider, but stay out of here would be my advice, especially when it's heavily counter trend and the high time frames are just a bit of a mess at that point. So yeah, that's my view of the London session today on euro dollar. So if you are going to look at the counter trend longs, I'd probably still focus more in here. You may come into New York, may want to look and see how prices coming into here. It's not the highest probability in the world, but I could potentially see something playing out from these lows, kind of if this demand chain starts to hold, but wouldn't really be something I'd massively advocate you do. Otherwise, kind of focusing on those pro trend shorts. Obviously, most ideal would be all the way up here, right? We kind of have this unmitigated extreme, or we have, let's check what 4 hour supply that is. Yeah, we have some fresh 4 hour supply here. Not the best because it hasn't broken any internal structure yet on a 4 hour chart, but you can see it being part of the supply chain. So, we've got some nice M15 supply within there. So they would be ideal because they're both in the premium here and here. Or we have this supply chain potentially starting to form. I really like how it swept these highs here. Nice aggressive retrace, right, that V-shaped movement with a fair amount of momentum. So yeah, I'd be more than happy to look for shorts from over here, even though it's in the discount. So if you are strictly following the beginner trade plan, obviously this wouldn't be valid because you need to wait for the premium, and that's totally cool. Just track these, keep an eye on them, journal it, build out your notions, and then next month or whenever you feel comfortable, then you can make those small adjustments to your plan, right, to make it a little bit more intermediate, to potentially look at shorting at a discount, etc., etc. But use your nuance and you don't want to be condescending, but use a little bit of your brain with that, right? Obviously on your plan, it's just one simple line. It will say, yes, I can short M15 in the discount, but you want to have that little bit of discretion to know probably not ideal to be shorting down here, right, into demand really near the extreme discount when it's all a bit messy, compared to if price was to come up to a zone like this, right? Nice applicability, part of supply chain, right? You're not trading directly into demand, etc., etc., right? Obviously that would be higher probability shorting from here than here, but I think you guys know that. Anyway, so I'll leave that there. Enjoy the New York session if you are trading it, and I'll see you in the next one. Cheers, guys and girls.